Welcome to Markets Now. I'm Michelle Ruck along with Brad Kooima with Kooima Kooima Varilek. We do have some pressure in both grain and livestock futures trade here this morning, but Brad, that's not after we had a very impressive day yesterday in the feeder cattle futures, new contract highs in September on back. So just a little bit of profit taking before we continue our path back up?
Well, I guess that'd be the camp I'm in, Michelle. Thanks for having me on, of course. If you, we've talked about this, basically there's a couple of styles of analytics. One would be fundamental. And there didn't seem to be a lot of fundamental, although you and I are going to talk about heat at some point in this conversation, I'm sure.
Right.
But yesterday was a big technical day, and especially on the feeders. I mean, if you pull up a chart, you got a market that's gone sideways for 2 months. Big, basically the longer the sideways, the bigger the reaction when you come out of it. And we pounded through the top side of that thing yesterday. And just as a little asterisk there, we were doing it while corn was 6, 7, 8 higher.
Absolutely.
Big up in the open interest. Big up in the open interest, I would suspect, is fund buying. We've seen a nice increase in the open interest on the live cattle as well the last couple of days. We saw the open interest come way down. The funds started to get out of stuff here in August. It looks to me like what they've done is they've saved up a little ammo. They've got dry powder, and they're coming back after the market. And obviously, the market needs a long speculator. So when they're on our team, you got to root for them, right?
So talk about technically where feeders project to now after that breakout yesterday.
It would be unusual if you didn't try to put me out there where I'm dumb enough to.
That's why farmers, they like those questions. So
okay, let's put a 3 in front of the feeders. How about that? I think feeder cattle futures will get above 300. Not tomorrow, but if I had to guess, it'd probably be sometime late in the first quarter. But we'll see. Obviously, things have to happen. We have to avoid recessions and different things like this. But the whole thing to me is contingent upon whether we actively go ahead and decide to retain heifers here across the north or not going into the fall, which that'll tighten up the feeder supply. Obviously, that's going to tighten up the fed cattle supply too as we move into next year. I would certainly think they would, areas that have had a lot of moisture, but time will tell. I mean, I've talked to a number of these ranch people that the average age of a rancher is very, very old. I mean, relatively speaking, for a job life anyway. And I know a number of them are saying, you know what, this is my retirement deal. I'm done. Or I can't hardly afford to save a heifer because she is worth so much to me if I sell her as a yearling. And I get it. Economics are going to drive a lot of those decisions. But I would still think at the end of the day, if you're a rancher, you got to have cows. And if you've liquidated cows for 3 years, you got to figure out a way to get your herd back. So we'll see. Yeah, 300, I don't know. Of course, I'm guessing. But you're also talking to somebody that thinks fat cattle can get well above 200 too by the time we get into that same time slot. So.
Well, we always like it when feeders are the leaders. So we'll see if they can lead the live cattle above that level. Okay, so let's talk about some of the other positive fundamentals. Not that it's positive if you have it, but we've had a lot of heat and it has continued that way. What kind of impact is this having on feedlot performance and weights?
That's a great question, and I think it's an important point here, and not just for the grains, but what's going on with cattle. So, from talking to a cattle producer that's got big cattle right now, I do. I'm experiencing this firsthand. Literally cattle that are loading this morning that are about 70, 80 pounds behind tracking. And those are in a Cadillac facility, in a barn with fans and everything. But when you sustain this kind of heat like we had last week, and now we're going to have another round of it, it just the cattle give up. They lose weight, they lose tissue, they just kind of lose their will to even go back to the feed bunk. I don't think you'll get that weight back. It's a little bit of a two-edged sword, Michelle, because you also have people like myself that are going to go, get them dead, sell them, get them out of here. I don't, let's not throw any more expensive feed at these cattle. So you're going to have maybe a little bit of a willing seller here for a moment. But that's not bearish, not when you look ahead just a little ways. So the heat, I think, is supportive to the market for sure. Somebody's going to argue about demand. Okay, maybe you missed a grilling date. I think that the weight loss and in some cases death loss far outweigh the whatever negative might be on demand consumption.
Although beef business, the choice cutouts above 317 looks very strong. It's very rare to have it at that level this time of year, isn't it?
Oh, for sure. Never done this before. The other thing
No.
that's interesting about it, Michelle, is the choice select spread, about double what it is normally. Another, proof theorem of, are you current or are you not? Takes days on feed to get grade. And when you got the select at a $25 discount to choice, it's a pretty good indication that either demand is really, really good for choice, which it is, or there's not very much of it, which I think is also the case. Just as an addendum to your demand or your beef question, and this is a subjective comment you're going to get from me because there's no way you can prove it or anyone can, but I'm told that the business of selling, not all meat is sold for tomorrow's shipment, right?
No.
There's meat that's sold for 15 days, 30 days, a quarter. There's some like cruise lines that buy it a year at a time. Anyway, but the outfront business, I'm told here, going into the fourth quarter this year has been good, and I'm really glad to hear that. With some uncertainty on the economy, of course, and interest rates being what they are, I'm going to try to stay dialed into that. But I think we go back to a deal here where not the only thing I can think of that was anything positive coming out of COVID was that I think we taught this generation that you can cook a steak at home. And it's pretty good. And you can do it twice a week instead of going out to dinner. So it sounds like demand is alive and well.
Let's talk about kill. The kill cuts have been killing us, I guess, but they're picking up now. 626 last week for the kill, 125 yesterday. What is that going to mean?
I think we're going to have the same kind of kill this week, 625 to 630 are the estimates. 125 kill yesterday is a nice big kill. I think there's a common thread that runs through whether you're a farm broadcaster or a commodity broker or a packer, or greed does sometimes create the decision making. And it looks to me like you got a packer that's got some margin again with the boxes this high, or he's got meat sold out front, probably both, and he needs to get cattle dead. Even in one case, even you had one packer add a Saturday kill, which we haven't done that for a long time. So I think the increasing kill is friendly. That tells me that they want to, get cattle dead, and for about 4 weeks or so, they, were intentional about slowing up the kill. Now we'll miss a day, of course, for Labor Day, but the kill picture to me, that's a positive thing for sure.
Absolutely. Okay, hogs up yesterday looked like they were following cattle back down here this morning, but are we getting close to a low being put in, at least intermediately in that market, or not?
The hogs are difficult, and I hope you don't ask me any demand questions about pork bellies. The behavior there has been erratic. You look at the last 2 weeks here, the market's swung back and forth in this trading range. We had been in a big trading range before that, broke out, gap to the downside, haven't been able to go get that gap yet. To me, you got a formation that's negative. Going into this, to the end of the year, typically our seasonal would be to be a little negative. My fundamental feel is that I'm bearish, except there are a big discount to live cattle, obviously, but I don't know. I can't seem to get the hog thing to fire off of these lows very far. It makes me think that we can go test them at least again, or maybe even take them out.
Yeah, we do have a good discount to the index though, so maybe that'll help provide a little bit of support. And then grain setting back here this morning, some of that is due to the fact that these crop ratings came in a little bit better than expected after that week of extreme heat. But how much more upside do you think we have, especially in the beans? I mean, when do you get weather basically all baked in here?
I think that's a great point. I was saying it out loud here yesterday. I guess I was a little surprised that, I think, yesterday was partly about reaction to the crop tours, final number on the beans being less than the USDA's last guess. But I heard an awful lot of commentary about, it's going to get hot again. At some point, I farm too. I mean, at some point, either it is or it isn't. I mean, the crop is largely, I think, what it's going to be, at least in a lot of areas. So if it's hot once more yet this weekend, is that really going to be impactful to yield? I'm not so sure it is, but. Clearly, we're going to have to try to figure out what this has done to the crop's ability to finish. I think this is every year it's difficult. I've given up basically to try to outsmart what the USDA's projections are going to be. At the end of the day, do I think the crop's smaller than what the last guess is? Yeah, but I think everybody does, right? So I don't know. The bean thing to me, you got within 20 cents of the last high, that 1435 high. If I was a hedger, if you haven't done anything yet, I would certainly that'd be the line I'd be thinking on the beans. Like corn, I'm sure you're less inspired when you're below $5 here, but I'm not particularly optimistic, frankly. It's not a great time of year to be that way. If we were a month from now and we were visiting, I'd probably have a little more of an encouraging seasonal low type of a thing looking at it.
Yeah, you wonder though if corn can follow soybeans if we go back up to contract highs and get above the $5 level. But even if we did, how long would we stay there? So
there's a lot of stuff above the corn, and I think the one question from a table standpoint is are we going to get our demand back or not?
Right.
Demand is lousy, but you can sell a lot more $5 corn than you can $7.50 corn, and particularly with crude oil being where it is, that you would think that the crush here, that the ethanol industry would be a factor. You're going to have 3% less cattle, maybe 5% less cattle. They eat more than half of the whole feeds residual thing. So, you're going to lose a little ground there. Right now, we're not really competitive in the world, export wise. So we got some shaking out to do, but low prices usually cure low prices.
Yeah. Although, like you said, we have some headwinds. All right. Thanks for joining us. Brad Kooima with Kooima Kooima Varilek. That's Markets Now.